In this presentation, we will work a problem recording transactions to government-wide activities as well as multiple different funds. The information is going to be on the left side. We're going to put that information into the blue area on the right side, journalizing the journal entries in the general journal, posting them then to a worksheet, trial balance, which will be in order, assets in green, liabilities in orange, what would be an equity section if it were a for-profit organization in light blue, what would be income statement accounts if it was a for-profit organization in the dark blue, these being the temporary accounts that would close out to what would be the equity section in a for-profit organization, closing out to net position here, in this case being the government-wide activities. Then we're going to do a similar process for the general fund. We'll have an internal service fund, we'll have a permanent fund, we'll have the enterprise fund, and we'll show some interplay between some transactions that will be recorded on multiple different types of funds. So we'll show some activity with regards to these different types of funds as we go through these transactions. Before we do so, we're going to hide some cells because we're going to have 2 columns worth of general journals here. I'm going to hide the second set of general journals so that we have the first set right next to the trial balance we will be working with. The way to do that, we're going to put our cursor on J, so we see the drop down. We'll select the left click and drag over to N, let go, right click on the selected area and hide. So there we have that. We're going to do the same thing with the general fund. So the second set of general journals for the general fund, want to hide those. I'm going to do that by putting our cursor on the Y and then left clicking and dragging over to A, let go, right click on the selected area and hide. All right. So now we're going to go back to our transactions. Our transactions, first one says we have the general fund budgets, estimated revenues, and appropriations. So when we think about the government-wide activities, our first account here, our first set of books, not going to record anything there because this is on an accrual basis, and these budgetary accounts are recorded onto the modified accrual basis. So if we scroll back over, then we're looking at the general fund. And also, as we do this, we might want to work on freezing the panes, and that might make it a little bit different, so I'll try that for now. To do that, I'm going to put my cursor on cell N1, and then we're going to go up to the view up top, and then we're going to go to the windows and freeze panes, and you'll select the first one, freeze the pane. And what that'll do is that'll keep cells A through C here as we scroll to the right. So we'll always have our data sitting there as we scroll to the right. So now we're in the general fund, and our data is still A through C, and we are in the general fund. So we're going to have the estimated revenues is going to be up top. So estimated revenues is going to be down here. You'll recall that we're posting the estimate accounts, and they're going to be an opposite, basically, type of count to the related account to them. So in other words, revenue has a credit balance. Estimated revenue, the budgetary account, will have a debit balance. So we're going to increase it by posting the budget with a debit to estimated revenues. Then we have expenditures like expenses. This is a modified accrual basis method because we're in the general fund, governmental fund. Expenditures have a debit balance. The related budgetary account appropriations then has a credit balance. So then we're going to pick up the appropriations, and it's going to have a credit balance. We're going to take the numbers from here. Now, to pick up the numbers, I'm going to use the mouse because if I use the keyboard, it's going to move the cells all the way back. So in other words, if I use the keyboard, see how it moves, I'd have to click all the way back. So the best way then is to use the mouse. We're going to click on this item, and then the appropriations is going to be negative of the appropriations. And then the difference is going to go to the budgetary fund balance, kind of like the equity section for the fund, for the budgetary fund balance. Negative sum, this is our plug formula of the 100,000, that then going to the budgetary fund balance. Let's post this out. We have the estimated revenues first. We'll be up top in the estimated revenues, and that's in AF10 equals, and we will then pick up the 2,101,000. Then we have the appropriations. So appropriations is going to be in cell AF11 equals, and we'll scroll over and we'll pick the 2001, enter. And then we have the budgetary fund balance. That's the budgetary fund balance. That's in AF8 equals, scrolling back over, we pick up the 100,000. Now, obviously, we have nothing happening here for number 1 in the other items in the internal fund. Nothing, because this is the budget for the general fund. So nothing's happening there. We've got nothing happening for the permanent fund for number 1, and we have nothing happening for the enterprise fund. So I'm just going to put none in the journal entries for those items. Then we can go back over here. We can select this and highlight it. I'm going to make it green as we go. So we'll say that one's green. It's done. Next one, we have the property taxes levied in estimated uncollectible amount. We're going to start back over at the general fund. Now, the quickest way to get there is to actually click over here on column C and then click to the right with the right arrow, and that'll pop us back over there using the freeze panes effectively. So now we're going to say that we want to have the property taxes levied. So we're going to say that we have accounts receivable. We've levied them, but we haven't collected them. This is similar to us basically like invoicing if it was a for-profit organization, government-wide accounting on an accrual basis. So we're going to say that we have the taxes receivable is going up, and there's an allowance. We're going to record the allowance as we go. This is kind of like the uncollectible portion, allowance for doubtful accounts in a for-profit organization. We're going to estimate how much we think is uncollectible. The difference then being the revenue, and we're going to call it general revenue for property taxes. So that's going to be our transaction. We're going to say then that we have the receivable of the full $2,042,000. We expect to have uncollectible, wrong cell, a credit of the 15. The difference is what we're going to record in revenue then. Negative sum, plug formula, and that means that the revenue is going to be the $2,027,000. Let's record this out. We're in the government-wide activities. We got the taxes receivable first. Taxes receivable in Q4 equals, scrolling back over and picking up the $2,042,000. Then we've got the allowance. That's going to be right underneath in Q5 equals, and we will then scroll over and pick up the 15. And then we have the general revenues. That's going to be down below. General revenues on the property taxes in Q13 equals, and we will pick up the credit there. So there we have that item. Now let's go over to the funds, and that should put us back in balance, of course, down here. Back to the funds, we're going to say we are now in the general fund. So let's go general fund, column U. We're going to say that the property taxes is going to be general. It's going to be included in the general fund. So number 2, we've got the taxes receivable, similar type of transaction, receivable. And note that it's going to be taxes receivable. It's a current asset, and therefore it's going to be on the books in the general fund, which is a governmental fund on the modified accrual basis. So you'll note what we don't have: long-term assets. We don't have the long-term liabilities, but we do have, of course, the current assets, and therefore this will look much the same. We're going to have the allowance, and then we will have the revenue being the other side. Only real difference here being the difference in the revenue account name. So we're going to say that this is going to be equal to the $2,042,000. The amount uncollectible will be the 15, and the difference between the two, negative sum of those two items, that being the plug formula, the $2,027,000. So we start off with the taxes receivable current. So that's going to be up top in cell AF4 equals, and we pick up the $2,042,000. Then we have the allowance underneath that. So the allowance is going to be right underneath in AF5 equals. We scroll over and we pick up the 15. So there is that. And then we have the revenues. So revenues is going to be in AF9 equals, and we pick up the $2,027,000. So there is that item. Now, the rest of them, we shouldn't have anything in the rest because this is going to be allocated to the general fund. So I'm going to scroll through the rest of the funds and just put none. So I say none in the internal service fund, the permanent fund, none. And then we're going to go to the enterprise fund and none. So we have nothing there. And then we're going to scroll back all the way to the left. I'm going to highlight this one, make it green, because we have completed that one. And we are now on number 3. General fund transfer to the internal service fund. What's going to happen on the government-wide activities? Nothing, because this is an inter-fund transaction. So nothing's happening government-wide. It is going to have something happening to the general fund and the internal service fund, however. So let's go to the general fund. To the right, we're going to say, all right, here's the general fund. Not that far. There's the general fund. So we're going to have the cash going out. So we know cash is going to be credited. We will credit the cash. And we know that the other side is going to be other financing sources. It's going to be a transfer out. It's going to be kind of like an expense, but it's going to be other financing sources. That's going to be for the $32,000. So we'll pick up the 32, debit and credit. Now, the funny thing is that we don't see any equipment on the general fund books. Why? Because it's a modified accrual basis. Modified accrual basis doesn't have long-term assets on it. So we don't have the equipment here. Therefore, we're not going to record, obviously, anything for equipment. Now, the equipment is recorded government-wide activities. It's on the books there, but we don't need to do a journal entry because it's going from the general fund to another fund. So that's a little bit funny. When we think about the enterprise fund, as we will look at, it's on an accrual basis because it's going to be a proprietary type fund as opposed to a governmental fund, and therefore we will see the equipment increasing on the books there, although we do not see it here because this is a modified accrual-based fund, the governmental type fund. So let's record this. We got other financing uses. We're going to be down here in FAF 12 equals, and we'll pick up the 32,000. Then we have the cash. So let's go up to the cash. That's in AF3 equals, and we will pick up the credit to cash of the 32,000 there. So there we have that. And now we can go over to the enterprise fund. So the internal service fund, is that where we went? Internal service fund. So within the internal service fund, we're going to say that cash is going to go up. Cash is increasing by that 32,000. So it's going to be increasing by the 32, but we also have equipment is going to be going up here as well, and that's going to be increasing by the 314, and we'll record the accumulated depreciation as well at the credit of the 75,000. And the difference is going to be the other financing sources interfund transfer in. And that's going to be an AL10 negative sum of these items. That'll be the plug. So note the interfund transfer in here, the 271,000, and the interfund transfer out, uses interfund transfer out isn't the same here because of the difference between the accrual method and the modified accrual method, an item that we would, in essence, have to reconcile for at the end of the process, at the end of the... So this transaction kind of demonstrates that problem, and later on we'll be looking at transactions or the ways that we will go through the reconciliation processes. Let's post this out. We're going to say the cash first, so we'll scroll up to cash. We are in AP3 equals, and scrolling back over, we're going to pick up the 32,000. Then we have the equipment. The equipment is going to be in AP5 equals, scrolling over, picking up the equipment. Next, we've got the accumulated depreciation, which of course will be right under the equipment in AP6 equals, and we'll pick up the accumulated depreciation. And then we have the other financing sources AP10 equals, and we'll pick up the 271,000 there. So there we have that. And then, of course, if we look at the other funds, we shouldn't have anything in the other funds because these are the two funds affected. So nothing in the permanent fund, none. And nothing in the enterprise fund, none. And so we're good there. And we'll scroll back over. So enterprise fund, permanent fund, the internal service fund, the general fund, and back to the governmental wide activity. So let's highlight that. We've completed number 3, so we're going to make it green, as is our custom. And we are on number 4, where we have a donation of marketable securities, fair market value, the 900,000, donation to be maintained in perpetuity while revenue is used to finance program revenue earned. So we're going to record the donation then, and we're going to say that we have an investment. So we're going to record it in the government-wide activities first. So we are in column F. We're going to say that we have an investment. So this equals the investment in marketable securities. The other side then going to we're going to call it general revenues for a contribution. General revenues, contributions for endowment. And that's going to be for 900,000. So we'll say 900,000 debit and credit. So then let's record that out. We're going to say investments to the left. We've got investments, marketable securities in Q6 equals, and we'll pull over that 900,000. And then we have the general revenues, contributions for endowments. So general revenues, contributions for endowments equals, and we will pull over then the credit of the 900,000. So there we have those two items. Now, what we're saying here is that the actual investment itself is going to stay on the books forever, and the earnings then are what we're going to use for the program. And so we have earnings at this point in time of the 50,000. So we're going to say, all right, 50,000 is going to increase for the cash. And then we're going to say the other side is going to be program revenue for culture and recreation. And that's what we're going to use the program revenue for, culture and recreation. So there we have that item. That's going to increase by 50,000, we said. Let's say it equals, and pick up the 50, debit and credit. So we'll record that out. Then we're going to go up top to cash up top. We're in Q3 equals, scrolling back down. We'll pick up the 50,000. Then we have the program revenue for culture and recreation. So program revenue, culture, recreation. That's in Q15 equals, that'll be the credit. So there's our transaction. So now we've recorded this in the government-wide. What happens on the fund activity? Well, this is going to be something that we have this in the books permanently because we're only going to be using the revenue from it. So this is going to be on a permanent fund. So we're going to go to the permanent fund is what we're looking for, not the general fund, not the internal service, but the permanent fund. We're going to be tracking this item, and we're going to say that it's going to increase by the investments. We have an investment in the permanent fund, and then, of course, revenues is going to be the other side of some kind, contributions for endowment. And so we'll debit that amount. So we are in AU9 equals. I'm going to scroll all the way to the left to pick up the amount of the 900,000, and then we'll have that credit as well. So there's the transaction. So we're in investments, marketable securities. We're going to be in AZ4 equals. We'll pick up that 900,000. Then we have the revenues, contributions for endowments. So that's going to be in AZ6 equals, and we'll pick up the credit. So there we have that. It's going to put us back in balance. Now, what happens when we get the actual cash, the revenue that's going to be earned on it? Notice that 900,000 is not going to move. It's going to stay there. That's why it's in the permanent fund. But the revenue, we're going to say now what happens when we earn revenue? Well, cash goes up. We're going to call it revenue from the investment earnings. And this is going to be for 50,000 equals the 50. So this will be a standard kind of transaction to record the revenue. Increase in cash. So in AZ3 equals the 50,000 increase in cash. And then the other side to revenues. And the investment earnings in AZ7 equals the credit to revenues. All right, so there's that item. And then we're going to transfer it out of the permanent fund. The revenues are going to leave the permanent fund because we're just going to be holding on to the initial amount and pay it to whatever we're going to use the investment for. In our case, we're going to say that we're going to transfer it out to other financing uses. Other financing uses and cash. So the project that we're actually going to use, we're going to transfer out of the permanent fund for what it's going to be used for. So note, again, the permanent amount's always going to be there. Earnings we're going to record. That then is the amount that we transfer out for use. It's going to be transferred out with the other financing uses, interfund transfer out. That's going to be for, once again, the 50,000 and the credit to 50,000. Now, we're not going to be recording the special project that it got transferred out to because we have enough transactions to record to here. So just note it's an interfund transfer out. Okay, so we're going to record this item. So we've got the other financing uses. Now this being transferred out of a permanent fund. So that's going to be kind of like an expenditure or acting like an expenditure in essence. And then the cash is going down. So that's in AZ3. So I'm going to say F2 plus F2. And we will pick up then the credit cash decreasing. So there's that. And there shouldn't be any other transactions affected, or no other funds affected, we should say. So I'm going to say none on the enterprise fund. Nothing's happening there. Nothing to see here. And then we're going to say the permanent fund, we have that. And then the internal service fund, nothing's happening there. Nothing to see there. And in the general fund, nothing's happening there. And we're back to the government-wide activities. We're going to then make this one green, that one having been completed. So we'll make that green. And we're now on number 5, where we have the utility fund billed, the general fund, and the general fund paid this amount. So we're going to say in the government-wide activities, we're going to record the expenses. We're going to say we have expenses for the general government. Expenses for the general government. Notice we're on the accrual basis method here, so we have expenses as opposed to expenditures. And then the other side is going to go to the internal balance. So it's going to go to the internal balance. Now note here where the internal balance is going to act similar to like an accounts payable type of account. So it's going to be going up with a liability. Then we're going to record the payment that has been happening. Now note here that we have a little bit of an unusual situation, of course, that being that we have the utility fund. So we have utilities being served, the utility being a proprietary fund. They're providing a service. In this case, the service being to another governmental entity, the general fund. So we have the general fund paying the utility fund. But unlike what we had before, number 3, we had the general fund transferred to the internal service fund. We had a transfer type of activity happening. Here we have an activity happening where we actually have services being provided from one fund to the other, although it's going to be inter-fund type of activity. So we're going to say then that we have the expenses recorded in the government-wide activity then related to it. If we post this out, that's going to be the 135. We're going to say that the expenses are going to be equal to the 135, and then we have the internal balance. The internal balance, which we're going to record up top. I'm going to put it in the equity section. Is going to be equal to the 135. Then when we make the payment, we're going to say that we have a payment, and that is going to be cash going down, and we're going to take it out of the internal balance. So internal balance and cash decreasing. So that's going to be, in this case, equal to the 134,000. So there's going to be the debit and the credit. So if we record this out, we're going to say that the internal balance then, if we scroll up to the internal balance, that's going to be in Q12. We're going to say F2 plus F2. Scroll back down, we'll pick up the 134,000. There is that, and then we'll pick up the cash. So cash is going to be up top. And that's in Q3. So we're going to say F2 plus F2. Scrolling down and picking up the cash. And so there we have that item. So that's going to be in the government-wide activity. Now let's take a look at the funds, starting with the general fund. So if we go over to the general fund, we have an expenditure. So we have an expenditure for basically the utilities. That's going to look similar. This is the modified accrual basis using the expenditures then rather than expenses, otherwise looking much the same as we would expect for the 135,000. The credit then being due to other funds, because again, we're paying the utilities, which is another fund. That's going to be similar to a liability type of account in this fund. And so there's the debit and the credit. If we record that, then we're going to go to the expenditures in AF13 and say equals, and scroll down to that 135,000, enter. And then we have the credit due to other funds. So we'll scroll back up, due to other funds in AF6 equals, and we'll pick up the 135 credit and enter. So there we have that. So that puts us back in balance there. Now we're going to scroll all the way to the right and pick up the rest of the funds here. The internal service fund, that's not what we have here. So it's not the transaction in the internal service fund. That would be just servicing internal. We have the permanent fund. Nothing's happening in the permanent fund. And then we have the enterprise fund. This is where we're going to record this item. This is going to be the utilities. Now, the enterprise fund, note that an enterprise fund typically has customers outside of the government. And so that's why normally we're dealing with something that's going to have customers in essence outside of the government. But in this case, of course, we have the internal customer as opposed to the internal service fund where all the customers are basically internal generally. So if we were to record this then in the enterprise fund, we're going to say that we have the due from other funds is going to be increasing. And so that's kind of like a receivable from a fund basis. And that's going to increase by the 135, like the bill. This is in essence us sending an invoice from one fund to the other or similar to it. And then we're going to have revenue, which is charges for services in this case. And that could be fees, same as saying fees or sales or something like that. That's what we're going to call the revenue account. So we'll say the debit is going to be 135 to due from other funds. That's going to be in BJ4 equals, we'll pick up the 135. And then we have the charges for services. Charges for services in BJ7 equals, and that's the 135 credit. So there's the debit and credit there. Then when cash is received, we're going to say cash is received. Obviously, cash goes up at that point. We'll say, well, okay, well then cash goes up, and then the due from other funds is going to go down. And the amount we're saying we received was 134, so we'll pick up the 134. That's the debit and the credit there. So now we'll say cash is going up. Let's post that. That's going to be up top in cell BJ3 equals, and we'll pick up the 134,000. Then we've got the due from other funds. Like the receivable going down. That's in BJ4. F2 plus F2, and then we'll scroll down and we'll pick that credit up, bringing us down to 1,000. Okay, so now let's go back and take a look at number 6. Number 6 says that we have the internal service fund purchases supplies. So we have a purchase of supplies from the internal service fund. We'll put this first on the government-wide activities. So within the government-wide activities, we have an investment in supplies. So we're going to have the purchase of supplies, pretty straightforward. This is on an accrual basis in the government-wide activities. So we're going to say that the supplies are going to be increasing. And the other side is going to be cash. We're going to say that we purchased it with cash. Fairly straightforward accrual type of transaction, and we're going to say that that is going to be for the amount given of the 9,500 debit and credit. So we have the inventory of supplies first, so we'll scroll back up top, and that's going to be in cell Q7 equals, and then we'll scroll down and we'll pick up the 9,500, and then of course we have the cash. So cash is going to be up top in Q3 where something's in it. So we're going to say F2 plus F2, scroll back down, and we will then pick up the credit of the 9,500. And so there is that. That puts us back in balance as so. So if we go through the rest of the funds, then what's going to happen on the fund side of things? Well, nothing in the general fund because this isn't dealing with the general fund. And then if we go to the next fund, which is the enterprise fund, that's the one we want. That's the one. Now, the enterprise fund, being a proprietary type fund as opposed to a governmental fund, is on an accrual basis as well. So we don't have to deal with any kind of funny business where we'd have the modified accrual basis and do something different with capitalizing the inventory or something like that. We're just going to go straight forward with the same kind of accrual basis. So pretty much same transaction here. And that, of course, is that we're going to say that the supplies will be increasing. Supplies goes up, and the other side is cash because it goes down. And the amount is going to be for, once again, the 9,500. 9,500 on the debit and on the credit. Okay, so let's post this out. We're going to go to the inventory of supplies. So inventory of supplies, that's in AP4 equals, and we will then pick up the debit. Then we have the credit to cash. So we'll scroll back up to cash. That's in AP3. Something's in it. So we're going to say F2 plus F2. And then we'll pick up the credit to cash. So there is that. And that's it. So then we're going to scroll back over and say permanent fund. Nothing happens there. So that one is as is. And the enterprise fund, nothing is going to be happening to the enterprise fund as well. So let's go back to our data. We're going to go scroll all the way back to the left, all the way back down, and we'll make the number 6 green because it has been completed. Now we have cash collections, property taxes, license and permits, user charges. So we're collecting cash. So we'll record this first in the general fund. So within the general fund, we're going to say that the cash is going to be increasing because we're receiving money here. So we're going to say cash is going up, increase to cash. And then the other side, we have the receivables, and this is going to be related to the property taxes. So we had the taxes receivable, and then we're going to put the other to revenue. So program revenues for the general government. So program revenue, general government charges for services. And so then we're going to say that the amount for the receivable is going to be the $1,935,000. That's the property taxes we collected. And then the license and permits and user charges is going to be I'm going to put both of those. We're going to group them together in the one account. So I'm going to say negative SUM of the 45 and the 33 to give us the 78. And then we'll sum them up. I'm going to do the negative sum function in G24 to pick those up, negative SUM. And we'll pick those up. And there we have it. So there's our transaction there. Let's post this out. Cash first. So we'll go up top and we'll post the cash. That's going to be in Q3. We're going to say F2 plus F2. Scroll back down. Picking up the cash. Next, we have the taxes receivable, current. Taxes receivable, that's in Q4. We're going to say F2 plus F2. Scroll back down. Taxes receivable, current. And then we've got the program revenue. So program revenue, and that's going to be in Q16 equals the program revenue, the 78. So there is that. That puts us back in balance. Next, we'll take a look at the funds. So we're going to scroll over to the general fund. So within the general fund, we're going to record the transaction. We're on number 7. It's going to be much the same transaction. We're going to say that the cash is going to be increasing in the general fund. And we're going to say that the other side is going to be to the taxes receivable. Now recall the general fund is on a modified accrual basis. However, it's much the same because the receivables are a current asset as opposed to long-term assets, and therefore they're on the books as if they were long-term assets, then they would not be. So we have much the same transaction. Then we'll record the revenue for the other taxes. So we're going to say then that the cash, or let's do it this way, we're going to say the taxes receivable was for the $1,935,000. The other revenues is the negative sum of the 45 and the 33. And then we can have the plug formula, the negative sum of those two, and that gives us the $2,013,000. So then we'll post this out. So we got cash first. So we're going to scroll up to the cash. So we're up top in cash. We're in cell AF3. Something's in it. So we're going to say F2 plus F2 and scroll back down to the cash. And we'll pick up the cash, $2,013,000. Next, we have the taxes receivable current. So we're going to scroll back up and we're going to pick up the taxes receivable. That's going to be in AF4, something's in it. So we're going to say F2 plus F2, and we'll scroll back down and we'll pick up the taxes receivable current portion. And then we've got the revenues. So the next item is the revenues. We're going to scroll back up, pick up the revenues. That's going to be in cell AF9, something's in it. So we'll say F2 plus F2. Scroll back down and we'll pick up the revenue of the 78,000 and enter. So there we have that. And now the rest of the funds, nothing happening in the rest of them. So nothing happening in the internal service fund. If we scroll over to, what's this one? This is the permanent fund. Nothing's happening there. And nothing's happening in the enterprise fund. So we're going to say none there as well. And I think that's the last one. So we'll scroll all the way back to we're now on number 8, and we have internal service fund build, the general government for internal services, also build the utility fund. So the internal service fund then is a fund that's going to be servicing just internal governments. They build the general fund, the general government. So we're going to record that in the general fund. and they build the utilities fund, which is an enterprise fund. So the internal service fund build the general government and build another fund, which is the utilities fund, which is an enterprise fund. So these are both proprietary funds. We got the internal service fund only services the internal government. We've got the utilities fund, which is an enterprise fund, a proprietary fund, enterprise fund type, which would service generally people outside of the government. So first we're going to record this on the government-wide type of activities. Now, this is an interfund type of activity here. However, one of the funds, they're both proprietary funds, one of them though being the internal fund. So in that one, because we're only servicing internal customers, we're not going to record on the government-wide type of activities. And so we're not going to record that here. But the enterprise fund, the amounts related to the utilities, which is an enterprise fund, we're going to record those activities. So to do that, we're going to debit the internal balances. So we'll debit internal balances and internal balance. And we're going to credit the program revenues. So we're going to credit program revenues for the charges for services. And that's going to be related to the 13,100. So that's going to be the amount that was billed to the utilities fund, the 13,100 debit and credit. Recording this out, then we're going to go up to the internal balance. That's going to be in Q12. Something's in it, so we're going to say F2 plus F2. Scroll back down, and we'll pick up that 13,100. And then we're going to pick up the program revenue for the general government. So we're going to say program revenue, general government. That's in Q16. Something's in it. So we'll say F2 plus F2. Scroll back down and we'll pick up the 13,100 and enter. All right, so now we're going to go over to the general fund and see what happens with the general fund. So within the general fund, we are on number 8, and we're going to actually post that to the second set of accounts here, to the general journal. So the cells, in other words, that we have hidden between W and this next cell here. So we're going to unhide cells first, in other words. To do that, we're going to put our cursor on column W, left click, and scroll over to AD, let go, right click on the selected area, and unhide. So there's the cells we want. Then we're going to hide these columns. We're going to hide column T, clicking on column T, scroll into X, let go, right click the selected area, and hide them. So now we are on number 8 in the general. Now the general fund was charged the 20,700. So we're going to pick that up. It's going to be a fairly straightforward transaction, like an expense, but an expenditure will be the debit. And then the credit's going to go to the due to other fund because it was the enterprise fund that charged them. So it's going to be due to other fund. The amount then being equal to, we'll scroll down and we'll pick up that 20,700. There it is. There's the debit and the credit. Let's post this out. So we have the expenditures. So we'll scroll down to the expenditures. That's going to be in AF13. Something's in it. So we'll say F2 plus F2. And we'll scroll back up and we'll pick up the expenditures to 20,700 and enter. Then we have the due to other funds. So that's going to be up top in AF6. Something's in it. So we'll say F2 plus F2. And we'll pick up the 20,700 and enter. So there's that one. Now we're going to scroll over to the other fund affected, that being the enterprise fund. Now the enterprise fund is the one that was charging the other funds, the general fund and the general fund and the enterprise fund, and therefore it's going to be similar to revenue and the internal service fund. So recall, this is an internal service fund, proprietary fund, accrual basis, therefore, even though it's a fund as opposed to a modified accrual basis, and it's going to be servicing basically internal governmental. That's why it's an internal service rather than an enterprise fund. So we're going to say that this is going to be increasing the due from others, so due from others, and the other side is going to be kind of like the revenue account, which we're going to call billings to departments. And the amount there is going to be equal to the 20,700 and the 13,100 billing to the two governmental funds. And so that's going to be the debit and the credit. So that looks similar to what we would expect, like a receivable due from others is similar to a receivable, and the billings to departments is like revenue. So we'll scroll back up top. We're going to pick up the due from others. That's going to be in cell AP7 equals, and we'll scroll back down, pick up that 33,800 and enter. Next, we've got the billings to departments. So billings to departments in AP9 equals, and that'll be the credit of the 33,800 and enter. So there is that. That puts us back, of course, in balance there. Next, we're going to go to the permanent fund. Nothing's happening, permanent fund. And then we'll go to the enterprise fund, which is the other fund that was billed by the internal service fund. So this is going to be similar to an expense. This is a proprietary fund. Once again, accrual basis. This one servicing mainly people outside of the government rather than all internal people within the government. But otherwise, proprietary fund acts like an accrual basis. Therefore, we're going to have an expense because we have an expense. And the other side is going to be going to due to other funds because the expense was from another fund. And this was for the amount of the 13,100. 13,100. There's the debit and credit here. So fairly straightforward, similar transaction, except of course the other side being rather than a payable due to other fund. So we'll record the expense first. So we're going to go up top. We're in cell BJ8 equals, scrolling back down, and we'll pick up the debit of the 13,100. And then we're in other due from others. So we'll scroll back up top, due from others. That's in BJ4. Something's in it, so we're going to say F4 plus F4. Scroll back down, and we'll pick up the credit then of the 13,100. And there is that. That puts us back in balance. Scrolling all the way back over then, we're going to scroll all the way back over to our data. And we'll just review what we have. So here is going to be the data. Here's the government-wide activity. Here is the government-wide trial balance. Then we have the general fund. I'm going to unhide these cells. So I'm going to go from R to Z, let go, right click, and unhide. Oh, let's do that again. Unhide. And then we have the general journal part 1, general journal part 2, which is the one transaction in it. And then we have the trial balance for the general fund. Then we've got the internal service fund. Here's the transactions for the internal service fund. And here's the trial balance for the internal service fund. And then the permanent fund, the transactions for the permanent fund and the permanent fund trial balance. And then the enterprise fund transactions and the enterprise fund trial balance.